Does the fact of defining myself as a value investor force me just to buy stocks? No, I buy other asset classes other than stocks. I love stocks. I love growth stocks. I love picking up stocks that are discounted and watching them rise in value. But I also invest in real estate and have done really well with real estate. I also invest in bonds, and bonds really fit a need that I'm going to have in the future. I plan to retire, and at that point, I want a source of the income that I'll have from my portfolio to be low risk, to be defined. And that's why I've set up a bond ladder for myself. I'd like to go through the creation of my bond ladder and how it fits in my portfolio to provide income and really make the next 5 years very defined in the inflows of cash that will either be used for my living expenses or be reinvested. I'd like to take you through that and share with you what I'm doing. I'll also reveal the bond that I am investing in here in the month of May. It's a good one, and I'm glad that I'm buying it. Before I go further, I just wanted to remind you that I'm an individual investor sharing my investing journey on YouTube. I am not recommending you buy any of the bonds that I cover. I'm not recommending you sell any of the bonds. And I'm not providing any financial advice. I'm just sharing my journey, my experience, my opinions. And I hope you find that all interesting. Why am I investing in bonds? Well, it's really because interest rates are so high. If you look at interest rates in the last 5 years, they're really up. Back in 2021, it was basically interest rates for the 10-year treasury, which is probably the most popular cited bond, was at 1%. It was like anemic. And I didn't invest in any bonds then. You'd have to be crazy to, lend somebody your money and, yeah, just pay me 1% and I'm going to lock up my cash. No, thank you. But now it's more than 4 times the interest rate, 4 times. And you can get a yield of 5%, 7%, 11% from corporate bonds. I'm looking at stocks from these same companies, and stocks are great. Long term, I believe equities have a great return. But short term, even the likes of Meta, the likes of these great companies, you can have volatility. You can invest in a stock and be down 20% in 12 months. Where bonds are very specific. Hey, you buy this bond, you will get your money back in a year or 2 years. And in the meantime, you'll get paid 5, 7, 11%. So that's why I'm more serious about bonds, is that interest rates are much higher. So let me start off with covering the concept of a bond ladder. What is it? Well, it basically means that you're buying bonds that mature in the next 5 years, meaning you buy some bonds that'll mature in the next year. They'll mature in a year, 2 years, 3 years, 4 years, and 5. Each bond will give you a maturity date, and you can see that, hey, this is going to mature in 3 years, and they will return the face value of that bond to me. In the meantime, they're going to also pay me interest, and that's also defined in the bond. So think of a CD. You could buy a CD for 6 months, 18 months, 2 years. You have to lock in your money at that point. After the CD period, you get your money back, and that's similar to a bond. Now, the bond ladder also means that as your bonds mature and the issuer says, hey, thanks for buying that bond, letting me borrow that money, here's your money back and some interest. And then I could decide, hey, great, I think I'll put it back and put it in the 5-year bucket, because that's probably the next bucket that I'm funding, and then start all over again. Of course, if I need the money, I can also spend the money. Or if I see that the market for stocks is really good, let's say we had a huge, pullback, stocks are down 30%, kind of like 2022. Hey, I'd rather invest in stocks right now. Great. But I'll have that liquid cash for me to decide, hey, what do I do with this? So that's what a bond ladder is all about. And now let me go through and show you my bond ladder, and also show you a particular bond that I'm buying into. So here's my bond ladder. It really covers the next 5 years and then plus. I have some longer term bonds, but I'm going to focus on the next 5 years, starting with 2024. I have some bonds that will be redeeming in 2024. I have 4 of them. So that's kind of spreading the redemptions, over the next couple of months, and the final one redeeming in November. A total, when you include cash that I have, 53,000. So that's a pretty good amount, and we're not quite halfway through the year, but I would say 5 months through the year. So I'm doing fine on trying to fill $80,000 plus in this bucket. Looking at 25, I've got more than 100,000 in this bucket, and it looks good. And I've tried to spread the redemptions across, months throughout the year. Looks like for 25, the interest earned will be a little over 6,000, and the appreciation on those bonds will be about 3,000. So collectively, it'd be over $9,000 of money that I've earned both in interest and appreciation. Looking at the next bucket, which is in 26, a little over 88,000 spread across the year. The third year, 81,000. Fourth year, 83,000. Then we get to where I'm currently investing in. So in 2029, which is 5 years from now, I'm currently buying into Kroger, which pays 7.7% on their bonds. Very nice, attractive percentage rate. And this is a company I'm very familiar with. I analyze Kroger from a stock investing perspective, and I'm very comfortable with this company. It's a good company. So I'm willing to invest in there. And I've actually bought $4,000 in their bonds. And this is in the month of May. And I'm glad I did so. Might be buying a little bit of more or waiting a month before I buy more bonds. We'll see how that plays out based on how interest rates behave. So that's the bond ladder for the next 5 years, trying to cover and have, an access to a replenishment of cash in each bucket for the next 5 years. And if I get a redemption and my best option is to put more into bonds, if these interest rates stay really high, I just keep replenishing this bond ladder. If we get to a point where discounts are really rampant on stocks, we have a huge sell-off like in 2022, I could take the capital and put it into stocks, but it's up to me. It's good to have the next 5 years kind of spelled out with bonds, which are a low risk, very defined way of generating income. Investing should always be personalized based on the investor's needs, their goals, and so forth. And for me, bond investing makes a lot of sense. Now that I'm 55 and as I approach retirement, it's good to become a good fixed income investor and have some of this learned process and learned strategy, well understood and well practiced. So having a bond ladder, I think, is going to be a permanent fixture to my overall portfolio. It's been really working recently, and I expect it's going to continue to work as interest rates stay higher for longer. I really appreciate you watching, and I hope you found it interesting.